Hey guys, here's another lesson, maybe a little bit further away from the mechanical structuring, right? But just kind of simplifying the logic. And I know a lot of people seem to struggle with simplifying it, right? I think a lot of people come to the markets, they try too many indicators, try too many charts, too many time frames. They're always looking for that, 100% win rate. Just kind of figuring in terms of what the logic is doing and why is going to put you on the right side of the market more often or not. Okay. Now, the last couple of videos I've done in the mechanical series is all to do with just simplifying the approach, right? It's here's my bias, here's my bigger picture, here's the levels, drop down daily into a 4 hour, for example. Here's my levels, here's why the levels, here's the liquidity, and then you just follow the money, right? Now it's not following the money in terms of I want to make money. It's you following what the money is doing, right? The charts are simply lagging indicators in their own right. The charts themselves is painting data as to what the price action has actually been doing. Okay. So again, following the money in terms of where's the liquidity, why is the liquidity, where's the volume, why am I chasing this type of volume? Okay. So putting all that together, what I want to do is just show this, pretty straightforward, right? If we take a swing high and a swing low, right, we can come back. There was obviously a swing high there, but this has clearly created a new high, right? Now this works on any instrument, any tool. There's going to be some that are a lot cleaner than others, right? But for me, this is the type of idea that you need to step back away from the close-up view, right? Because even if you trade in intraday type setups, you still need that overall bias, right? So this is where some of the tools and the techniques, such as Elliott waves, having a daily bias per candle, these types of things will just add and enhance this as a technique. Okay? So what I want to do is, knowing that we've seen the price push down and the price push back, is I want you to start to understand and start to even think, but what happened at these high levels? Right? Well, clear as day, there's a big wick there, right? That one for me is something that's going to say, hey, something stopped the momentum to the upside. Price at this stage dropped, came back, right? Probably made a slightly higher high by the looks of it. You put that to the top of the candle just to be sure. Yeah, made a slightly higher high, but failed, right? Which obviously then changed the direction overall. So first thing for me is, what's going on in and around there? Well, I don't need to guess. What I can do is say to myself, well, clearly price rose, price failed and failed, right? And then ultimately pushed down, which means in this area, there was an awful lot of sellers, right? So if we got a lot of sellers in and around this region, what we then want to do is follow the money, right? So again, we can step in and say, down, up, down, up, down, up, down, right? At no real stage do we actually change the overall direction. All of these are actually acting as, lower lows and lower highs. Right? Again, follow the money, keep going, right? There's nothing that changes the trend until we start to break above this level. And this is ultimately your market structure shift. Right? So it's not all that difficult. Right, now let's assume that we hadn't seen and we don't see what happens from the low. Okay, what we can do is we can take this swing high and we can take this swing low and we can say to ourselves, right, let's look at some areas of interest. What's actually happened in this move? Right, now from this particular point, again, clear as day, lots of buying coming at this level. Right, so if we had lots of buy-in at this level, we had a little bit of buy-in at this level. Wrong one. A little bit of buy-in at this level, right? And a little bit of buy-in at this level. We could argue little tiny spike sitting there. So for me, if I was drawing this as some kind of profile, all of the main action happened in and around this as a range, right? Then we have almost a nothingness. Then we have a little bit more action, right? So the action kind of steps up, right? Then we got a very thin area in between. So as that action steps up, right, the action comes back, and then ultimately the action comes in again, right? And then we get a new reaction back down to pretty much nothing, right? Now, if you've read my book, you would have seen me talk about things like a P-shaped profile. Although there's a little bit of a move in there, I kind of don't like it, right? So, in the grand scheme of things, if I was to go and draw that, right, and I don't need to, obviously I could stick a volume profile on. This is just to kind of give you the idea in terms of what's going on. I've got lots of volume, right? I've got a bit of volume. I got a drop to nothing. I got a bit of volume again, right? Now, there's probably more buy-in, well, potentially in there, right? There's probably more buy-in in this side because it was a bit longer, right? And then again, drop to pretty much nothing, right? So at that stage, my point of control is definitely going to be up high. Well, there's your clue in terms of where you're targeting back to the upside, right? You've got a value area, and you're going to have a point of control sitting somewhere in that lane, right? And again, we don't need to guess. We don't need to, we don't need to see this. We can actually look at the volume profile. But understanding what's going on is key, because every time we break through a certain level, right now, this is my buy-in. We break through the level, we come back and retest. We dart down straight to the next level. That area is a big area, right? Because clearly sellers stepped into the market. These act as magnets right into the future. So if we were to look at that as a bit of a profile, right, and this is a bit of an understanding, let's stick on a volume profile tool, fixed range volume. We come all the way from this high, all the way down to the low, right? And we've got, okay, point of control a little bit higher. Right? We got massive volume in and around the area, right? We got a little bit of volume there, a bit of a spike, a bit of a dip, a bit of a spike. The charts has given all the information we needed, right? We don't need this to tell us what's going on. Right? The charts have given the clues. Now, we could zoom into this, we could add the numbers to this, right? We could find as much data as we really need into this. But the whole point of the mechanical process is to break down and simplify what we're actually looking for. So I don't need to know, oh, there's my exact POC, there's my exact volume bump or spike. Right? What I can do with this is I could look at this and say to myself, right, the price breaks up and above this level. At this particular stage, I can look at the low to the high, and I can drag this out. What a shock, what a surprise. Look at what happens as we breach the level, come back and retest it, come back and retest it, back and retest it, right? Back in, back to retest, shoot up, straight back in to retest it. We fail, right? Which means there's an awful lot of buyers sitting in this zone. So we've got sellers up here, right? That's supposed to be an S. We got sellers sitting up there and buyers sitting here, right? So if I now look at what we're doing, this particular low was taken out there, which means the momentum is very much to the upside. We've had the liquidity grab down low. Now what I want to do is zoom back out a little bit further, right? And in theory, we failed this level over here, right? So the biggest attraction for me is up here. There's the plus, right? Now, if I was to say, that's what I'm looking at, this is what I'm looking for, I can do exactly the same thing again, right? Now, again, I don't need to use the volume. I don't need to be looking at the volume, right? But if I was to say what's gone on since this swing low, let me get rid of some of these drawings just to make it a little bit cleaner. Right now, following the money, which is one of the videos that I did the other day on Bitcoin, I think that one was, right? Following the money means that until you get a change of character, right? So this one here, up, down, fail, right? So you get a change of character, right? You are bullish until it changes the next time. So in this particular move, right, this could have been the false move here. But what it's done is it's created more liquidity for the drive. Now, obviously, we've got all this data, right? So I'm going to go up to where the current price is in terms of what next. But the general idea is this is telling me a story, right, as to why. So what we've done is we've pushed. Now, every time we've come up to this area, right, we look to the left, we've had strong sales come in. So again, a little bit of an area here. Strong sales from over there. Right. Let's see what we're doing over here. Well, now we've broken the range. So the money flow right now is technically to the upside. Right? So this confirms what I'm looking for in terms of the upside. Right? Doesn't mean they have to go straight up there. This is where you drop down a time frame and then you start looking at these types of setups, the mechanical structuring, the daily bias, even stick some Elliott waves on, right? This is where you refine the process. But the general direction right now is until we grab liquidity to the upside, there's almost less logic to come back down, right? So what I want to then do is to look at this and say, okay, if this clearly breaks that structure to the upside, where do we think a lot of the volume and the process was actually conducted at this particular point, right? Now, it's not something that we need to be, overly concerned on, but if we were to guesstimate this again, we're going to have a pretty decent volume spike there, because clearly a lot of buy-in stepped in. But our real value, right, is going to be underneath this level because we failed. We're still failing at the moment, right? But the real value overall is actually going to be up a little bit higher, right? Then we've got all of this here, right? So right now, if I was to guesstimate this as a level, right, we've got some really interesting moves in there, which puts my point of control probably on the higher side of that, given we're in this uptrend. Okay. Now, again, I'm not too concerned, too bothered by where exactly the point of control is or why exactly the level's there or what the level's doing. I'm just trying to give myself the best chance and the best opportunity in terms of where the price wants to push, right? So what I'm going to say is obviously the volume there, right? That's kind of the area of interest. I could see we would want to come maybe back down for another test, right? We've got a very strong push candle there. And then we start to dart up, right? That's the type of thing that I'm looking for. Again, I'm not going to short this. I'm not going to say, oh, you do this first, then that. This is where you step into the smaller time frames, right? So what I'll do is I'll stick the volume profile on again. I'm going to go from the swing low this time. And I'm going to come up to the current swing high. It's kind of the end of the trend. And again, it's not that difficult to see. We've had a bit of volume sitting in there. We've had a lot more volume to the upside. And the volume to the upside is carrying buying momentum, which means we're currently in some kind of retest of a situation to carry us on through, right? These are the types of things that by using the mechanical structures, right, by then refining, taking this on a daily time frame, taking this, on a weekly time frame, it doesn't matter what the time frame is, because once you have the bias bigger picture, right, you can then step down a time frame. So I'm going to come down into the daily time frame. And then what I want to be doing from the daily time frame is following the money in that sense, right? My bias for the week is up. My bias for the day is currently up, right? Until we break this, angle that on, sorry, until we break this particular level. Right? So right now we bounce off this level, which means if I had to guess, I would be saying bit of momentum down, bit of a pullback, break through the level into the retest zone. So what I'd like to see is a bit of momentum to the upside on things like my stochastic, and then obviously bigger picture, I'd like to see the move pointing down, right? So let's have a quick look in terms of what we got on the stochastic. So a bit of upward momentum. Let's zoom out and see what we've got on, say, monthly time frame. Monthly time frame, if we load, then here we go. Right. So for me, bigger picture is we're in a downtrend move on the daily. We want that move to turn to the upside, which is actually a pullback, and then the momentum will carry us down. So my daily bias for maybe even the rest of this week, probably to the long side and probably a little bit more bullish on this particular pair, on GBP USD. And you can do this analysis for any pair, right? Any instrument, any tool. So I'm going to finish it like that. I want to keep this one as short as I can, and I'll see you on the next video. Again, thanks for watching, guys.